Hey, what's up, guys? Good morning and happy Monday. Happy October. My birthday month, if you're keeping track at home. Hey, what's up, Russ? What's up, Stick? Good morning, Lorna. Peter, it's about that time of year, man. Gonna get real beautiful up there in Vermont. Mirza, McGurr, Tony. All right, guys, so I got a jet here. I got a doctor's appointment in about a half hour. And I live about 10 minutes away, so if the math adds up here, we got about 15 minutes. So for the week ahead here, and a quick look at the futures, S&P's down about 6 points. The NQ's down. The NQ's flat. And the dollar is green. The dollar is green. So really, guys, no major changes last week, meaning the market remains a short here. And as always, the closer we can short it to the 21 EMA, the better as far as risk versus reward. Now, if anything, things actually got a little bit worse last week, just in terms of the signals. So if we jump over to the weekly here for the S&Ps, let me get rid of these drawings for y'all. But all right, weekly chart for the SPX. We have 2 weekly closes under the 21 EMA. All right, never a great thing for the bulls. Also not a great thing for the bulls. Notice how momentum crosses below the zero line. So we're getting that negative momentum cross for the first time since November of last year. They shifted momentum. They rebuilt the structure. They eventually got that big weekly squeeze. We got the weekly squeeze buy signal. All right, big push to the upside. And now we're at a point where not only is that weekly squeeze over, from a structure and a momentum point of view, it's giving back a lot of the progress that it made. If they can't quickly get this back above the weekly 21, to me, it's just further evidence we're trying to short these bounces. So negative cross on the SPX weekly, and then over on the QQQ weekly. Now, here's the thing, guys. Bigger time frame squeezes. It's it's easy enough to lose sight of them because they can take so long to develop. Where if you wake up and find a 15-minute squeeze, pretty good chance it's going to give you a trade that day. Now, you find a 30-minute squeeze, an hourly squeeze, you tend to get the action pretty quick. Now, the thing about your bigger time frame squeezes is that, one, they're going to lead to some of your bigger moves, right, which for a swing trader, that's really important. You're going to have some of your best swing trading to the upside, some of your best swing trading to the downside when we're coming out of squeezes on bigger time frames. So I'm talking like a weekly squeeze, a 3-day squeeze, a 2-day squeeze. They can lead to big moves. They can lead to some of your better swing trading. They can just take their sweet ass time actually developing. So you'll notice the weekly squeeze back here. That took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 weeks until you had any kind of meaningful swing trading from that squeeze. All right, so with all that being said, this is going to be week 2 for a brand new weekly squeeze here in the Qs. Meaning come November, December, January, we might still be in a weekly squeeze. Doesn't have to fire this week. Doesn't have to fire this month. Doesn't even have to fire this year. To our benefit, though, we're finding this nice and early. And chances are, guys, you get through January, February, March, April of next year, the weekly squeeze is probably fired. So it's to our benefit to find it early, watch it develop, see if it leans bullish, see if it leans bearish, and eventually there should be some really good swing trading on the other side of that squeeze. Now, here's where the bigger picture plot thickens. It's not just the QQQ in a weekly squeeze. You got a couple of the big boys. Microsoft has a weekly squeeze. Momentum just crossed negative. Scoreboard gives the Bulls the edge, or the Bears rather. But point being, come December, January, February, March, we're probably looking back, and the weekly squeeze is probably fired. Think of what the last couple of weekly squeezes did. That weekly squeeze dragged Microsoft lower by 60, 70 points. All right, as a swing trader, you want to catch a little bit of that. This weekly squeeze takes Microsoft from 250 to 370. All right, that's some good swing trading. No telling if this squeeze fires long. No telling if it fires short. No telling if that's next month, November, December. Again, point being, we found them now. So when the day comes that they do fire, we should be all over it. So QQQ, brand new weekly squeeze. Microsoft with the weekly squeeze. You have Amazon. Also in a brand new weekly squeeze. And then I believe we have NVIDIA. Yeah, brand new weekly squeeze. So I can't stress enough, as a swing trader, these might not give us anything to work with for 2, 3, 4 months. Right? They might take a while to develop. But go through the weekly chart of NVIDIA. Go through the weekly chart of the Qs, Amazon, Microsoft, Meta. And again, you tend to get some of your best swing trading when you're coming out of those bigger squeezes. So keep an eye on those bad boys. But a bit more shorter term here, I think we've got a pretty clear target to the downside. A clear target being the 200 SMA. All right, the 200 at 4,200. Now, I think the bigger question is, are we going to head right down towards it and just kind of see the Bears get the job done with? Or, and selfishly, this is what I would like to see, before we're cruising down towards that 200, can we get one more meaningful rally? Like something that lasts for more than 45 minutes. Something that maybe takes us back towards that 21 EMA. Then I think is shorter for the flush back down. So as far as trying to figure that out, are we going to just keep puking it up? Or is there actually room here for a nice bounce? What I think you want to anchor to then, to try to get that answer, is going to be your lower time frames. You're not going to see really anything in the daily chart that says, hey, here comes a rally. Unexpected error has happened. Be gone. But yeah, right, your daily chart's awful. Momentum's busted. The structure is busted. You got sell signals. Nothing about that is going to say, hey, here comes a nice short squeeze. Where you're going to get the signs of a short squeeze would be from the ground up. The weekly chart doesn't look good. The 3-day chart doesn't look good. The daily chart doesn't look good. If the Bulls are going to get anything going, they have to start from the ground up. Meaning the 2-minute, the 5-minute, the 15-minute, the 30-minute. The morning we wake up and the S&P futures have a 15-minute buy signal, a 5-minute, a 30-minute, an hourly. Well, then they're at the point where, despite the crappiness of the daily chart, they're finally showing up. They got a little ammunition on the lower time frames. Then they can try to take it higher from there. You take the futures this morning, there's zero evidence that we're going to see that bounce. 1 hour sell signal, 30-minute sell signal, 15-minute sell signal, 5-minute sell signal. Now, here's another reason your lower time frames are really important. You're going to have a lot of folks out there, right? A lot of retail traders getting long the market simply because we're oversold. Right? They'll have some rule of thumb for what oversold is, and they're going to sell the puts. They're going to buy the calls just because we're quote-unquote oversold. Oversold can turn into really oversold, that can turn into really, really, really oversold. All right. What oversold is just context. For me, the context is, yeah, if we're that far from the 21 EMA, I'm probably not going to put my whole account into puts. It doesn't feel like the spot to me to get aggressively short. It doesn't mean I'm turning around and getting long. We can be at -2 ATR. Right, we can be 3 ATR from the 21 EMA, 4, 5, 10 ATR. If that's what your lower time frames look like on the signals, the bulls have got no chance of taking it higher. They can't even keep a 1-minute chart bullish. Daily gets a sell signal. The 1 hour gets a sell signal. The bulls, they show up with nothing. So spots to be careful. All right, don't get long assuming we have to bounce. Market doesn't have to do anything. Market's going to do what it wants to do. And then, from a swing trade perspective, it is a tricky spot to get short. You could load the boat on the shorts here. Tomorrow the futures go up $100. Nothing's really changed. So spots for patience, spots for discipline. But for a few scan results here, guys, and then I got to let you go. My thinking right now is if I'm going to get short, I'm probably just going to short the S&Ps or the Qs. Right, covers all the bases. You got no liquidity issues, good spreads, all that good stuff. If I was going to short an individual stock, it'd have to be an A+ setup. So one that I do like here, one that I do fancy for a short, is this JP Morgan. And remember, if the S&Ps go up every day this week, most stocks should do the same. So you're really trying to time your shorts with a move lower in the market. So take a JP Morgan where you have sell signals on pretty much every time frame. Get a beautiful daily squeeze. Right, it's an A+ setup. And I think we all got a pretty clear target down here at the 200 SMA. Where that trade is very likely to work is if the S&Ps head down to their own 200 SMA. S&Ps dump, whole market dumps, JP Morgan probably dumps. Now, even though JP Morgan is a great short, right, nice squeeze, bunch of sell signals, if all the S&Ps do this week is just rally and rally and rally, the short's probably not going to work. Unexpected error. So yeah, take consideration of doing the majority of your shorting on the indices. I think it simplifies the whole process. It gives you one thing to watch versus having to watch 20, 30 names. And sometimes what can happen is we were short ADI a couple weeks ago in the Mastery. It eventually went a little bit lower, but we're short ADI back here. Got a great squeeze, bunch of sell signals. So in my book, it's the perfect short. So I shorted the perfect setup. A couple days later, down goes the S&Ps, down goes the Qs, down goes pretty much the whole market. So my timing was perfect. I shorted a stock that looked like a good short, and then the market rolled over in my favor. All right, everything came together, and ADI did nothing. Seemingly every other stock in the market is just rolling over, and ADI is kind of chopping. Does it happen all the time? No. But it's a headache you can avoid by just shorten the S&Ps or shorten the QQQ. But all right, folks, I got to let you go here. Got to run to the doctor's office. For those of you here in the Essentials room, I will be back today at, let me check the calendar here. But I think I'm back in here today at 1 p.m. Let me see. Yeah, so Essentials Room, folks. I'll be back in here today at 1 p.m. Eastern, 12 p.m. Central, where I'll be talking a little bit about an account challenge we're going to be doing here in the Mastery. So feel free to come through. I'll chat about that. We'll look at a few charts, and we'll see what's happening here today. But guys and gals, you always for your time. As always, hope you find it helpful, and I'll see you again this afternoon. Adios.